I am about to hurt a lot of people's feelings, but hopefully help your portfolios. There's a crash coming, and it's not a crash that you would think. It actually has to do with ARM stock. ARM stock could collapse, and this could bring down the markets and your AI specific trades. I'll explain exactly why that is, what the timing is for this, and my expectations. Now, the reason specifically ARM collapsing would likely cause the S&P and the NASDAQ to also go through a correction-like event. This could be a 5 to 10% pullback, is simply because ARM is one of your high-flying AI stocks as of lately. A lot of this market, 90 to 95% of the trading volumes that you see on our markets are algorithms. What algorithms like to do is buy and sell stocks based on what other stocks are doing. So for an example, if nvidia has good earnings, ARM tends to go up, AMD tends to go up, Broadcom and SMCI, they tend to go up as well. If nvidia had bad earnings last time they just reported earnings, the S&P would have likely sold off, the NASDAQ for sure, and your AI specific stocks. So bad news for one is bad news for all. And let's just be honest, if nvidia really did have bad earnings last quarter, the markets would probably be 5 to 10% lower right now. There's something that has been happening for a while. It's a draining of liquidity in our markets. So there's $6.2 trillion, trillion with a T, not B, but T, in money market funds. This is 3 times the market cap value of the Russell 2000. This is equivalent to over 3 NVIDIAs. That's a lot of money sitting in bonds, sitting in, money market funds, collecting a 5% yield. You've been seeing money leaving the markets for a while, for 2, almost 3 years now. So you don't have much liquidity in our markets. So this AI craze, sure, it's brought some money into our markets, but nothing that you can actually quantify. There's no headlines that, $50 billion just went into stocks. No, NVIDIA's earnings gained it about almost $300 billion worth of market cap. Where did that come from? That came from small and mid-cap stocks. It came from other areas of our markets. So the money's been concentrating into these AI stocks. One reason why the percent of stocks above their 50-day moving average is only at 55%. When you actually started 2024, 86% of stocks were above their 50-day moving average. But what's happened over the last 2 months? It's been this AI craze, this AI hopium and hype that has really captured the markets. Now, why does the S&P and the NASDAQ keep going higher? Well, it's pretty simple. NVIDIA's over 5% of those indexes. Microsoft, grouped into that AI category, is the largest weighting of both the S&P and the NASDAQ. It's pretty simple. The money is going into these stocks, even Amazon and Google and Apple, believe it or not. Whereas it's not going into other stocks, and these stocks have high weightings in the S&P and the NASDAQ. So it continues to push up the markets as this AI trade continues to get stretched out. Now, I think just judging off of the S&P and the NASDAQ's chart, you should probably be seeing a correction at some point. I mean, there's very little volatility to the downside or price discovery at all. I mean, what is price discovery? Stocks go up, stocks go down, we get good news, we get bad news, and markets are like, hey, this stock's good or this stock's bad. It's price discovery. When stocks continue to go up, you get into a FOMO-like cycle, and there is no longer price discovery. It's just, we got to be in these stocks because they continue to go higher. That typically does not end well. Now, I'm not expecting some kind of utter collapse of markets. That happens when either inflation goes higher or when the Fed starts to cut rates because the economy is getting worse. Those are the 2 things that will cause big crashes in our markets. I don't think that is right now, although it could be. It definitely could be. There's a couple important events that you need to know coming next week and the following week. So the next 2 weeks are going to be critically important for our markets. Next week is the lesser eventful of the two. Next week, starting on Monday, there's not going to be really anything at all. Couple Fed speakers, couple bond auctions, nothing too crazy. On Tuesday, ISM Services PMI will be coming out. That's important for the inflation picture, but that's not actually important, in my opinion, next week. Next week, you have Jerome Powell that will be testifying in front of the Senate, and he does that on Wednesday and on Thursday. Now, on Wednesday, you will also get the ADP employment change and the JOLTS job openings. That could be a little bit more important for just the overall state of the economy. Now, on Thursday, you're going to get Fed Jerome Powell again that will be doing this, testifying in front of the Senate. Whether or not we get news Wednesday or Thursday that is new information, I don't know. I'm not expecting it that we will get new information. But if we do, there's always a chance that stocks may not like that. I think if you're looking at this on a risk to reward basis, like, is the good news priced in or is it not? I think the good news is priced in. If anything, the bad news is not priced in as a possibility of happening, and you could be subject for downside surprises based on what Fed Jerome Powell does say on Wednesday and Thursday. Now, later on into the week, on Friday, you will get the non-farm payroll report and the unemployment rate. Any change here will obviously affect the markets in a big way. But believe it or not, the event I'm actually referencing is the ARM lockup period. The ARM lockup period is on March 12th. Now, I don't think people understand what could happen on March 12th and over the next following weeks after that. Just based on what ARM stock has done recently, I think people are destined to lose their ass on this stock. Now, March 12th is the lockup period in which SoftBank can start selling shares of ARM. March 12th is also the day of CPI, so I think next week into March 12th will be very important and eventful for our markets. But now, why is ARM going to collapse? And I mean, this stock could collapse. My base case is around $95. My worst case is like $50 for this stock over the next couple of weeks following the 12th. So maybe by April 19th, the next large expiration in the options market after March 12th. Yeah, I think it could be really, really bad. Take a look at this. SoftBank owns 90.6% of ARM's outstanding stock. 929.7 million shares of ARM. That means there's only about 94 million shares that are actually trading on the markets today. No freaking wonder why ARM has been going straight up. No wonder. No freaking wonder. Because 90% of the stock that is out there is not allowed to get sold. Here's the problem. SoftBank is only worth about $85 billion. If you just look at the value of SoftBank's ARM position, it's $130 billion. Their ARM position is worth more than the entire value of SoftBank. Now, that never ends well. I'll just tell you that right now. That never ends well. But back in 2016, SoftBank took ARM private for $32 billion. In 2022, SoftBank tried to sell ARM to nvidia for $40 billion. So they only wanted or felt comfortable with making an $8 billion profit. They are up from their initial purchase price of $32 billion, about $100 billion in their ARM position. Now, SoftBank has had some problems recently. WeWork, that real estate developing company, well, they lost $14 billion in that bet alone as it just went bankrupt back in November. So SoftBank is in a position where they are going to sell a crap ton of ARM. Now, when they sell ARM, it is going to be very, very dilutive. For an example, if ARM were to sell, let's say 30% of their position, 30% of 929.7 million shares, just 30%. Like, they could sell 50%. They could sell more than that. But just to sell 30% would be 278 million shares of ARM. Divide that by 94 million shares that are trading right now. That would be about 300% dilution. That would be 3 times the float over itself if they just sell 30 million shares. And that would be my base case assumption. Now, if they sell 30% of their ARM position, you also have to take into consideration the volume that we see on an any day given basis. So the volume that we normally see is about 15 million shares in ARM that trade hands every day. If ARM Bank just sold 30% of their ARM position, 278 million shares, divide that by about 15 million shares that you tend to see, 15.3 million shares. Let's see. It would take about 18 days to sell out of their ARM position. And I would expect that could happen. Now, that would be that would be if SoftBank was selling 15 million shares a day. If that's the average volume today, imagine what that would do for ARM stock. Come on. We don't even want to think about that. That could be huge downside. And it's kind of crazy to think about. ARM's position, or SoftBank's position in ARM, is worth about $130 billion. The whole market cap value of ARM is $145 billion. So there's only $15 billion of market cap value in people's portfolios right now. And a lot of this value is held by institutional investors. Over half, right? If you look here, GQG Partners owns 13 million shares. Jensen Associates owns 7.3 million shares. Schroeder Investment Management Group owns 6.4. Here's another 4.5 million, 3.5 million, 3 million, 2.5 million, 2 million, 2 million, 2 million. And then you look at like Goldman Sachs, their mutual fund owns 7 million shares. This one owns almost 2 million. This is about 1.5 million. That's 1.3 million. So really, that's a problem. Okay, no matter which way you want to put it, even if ARM Bank or SoftBank were to sell 10% of their ARM position, that would still be massive selling of ARM relative to the float that we have outstanding now. Just to sell 10%, which I think they're going to sell a lot more of that, but just to sell 10% would be doubling the float that is outstanding right now. What do you think that's going to do for the stock? What do you think? Well, it's not going to be great, okay? Just to sell 10%, like that's crazy. I've never seen anything like this before. It's been a very long time since we have seen anything like this before. Now, I wish I could say there was also valuation support, but there's not. I mean, the PE multiple, the trailing 12-month PE is 1,700. The next 12-month PE multiple is like 1,000. Okay, so there is zero valuation support at these levels. Even if you look at good old Robinhood's assessment of fair value for ARM, it is $45 is what they say is a fair value for ARM. $45. That's including the V9 chips that they're going to have coming out and the additional licensing that we will see. Now, I want to be fully transparent here. I do have some trades on ARM. I do have April 19th, $70 puts. I have 20 of them for $25 a piece. I do have 50 ARM, $55 puts for $10 a piece. And I'm down about 27% right now. ARM just keeps going higher, which is honestly crazy heading into the lockup period. Now, my personal strategy with this is I think ARM is going to fall quite a bit after March 12th. I'm not expecting these $55 puts or even these $70 puts are going to go into the money, but I do think that's going to cause a lot more fear and a lot more of that rush to buy put kind of mentality in ARM, and I think the premiums of these contracts can go up a lot. Imagine if ARM on Monday or on March 12th dropped 20% a day, 10%, 15, 20% a day, some kind of large number. Yeah, these are going to go up a lot in value. So it's a trade simply. I don't think these are going to go into the money. I don't think it's a home run either. There's definitely a lot of risk here. I have about $1,000 of premiums in this trade right now for ARM. So it's not a crazy huge trade, but it is a decently large trade for me. And potentially a better way to even trade this would be the S&P or the NASDAQ, right? If ARM does fall because SoftBank is selling tons of stock, which will happen, let's be honest, that will happen on March 12th or over the next couple of weeks following March 12th, then yeah, the S&P and the NASDAQ could easily fall 5 to 10%. That is if nothing changed from where we are today. If the Fed is hawkish, if CPI comes in hot, if the economy is deteriorating, those are also factors to consider. So yeah, long story short, this is not going to end well. And I know some people are in ARM. Again, simple supply and demand would say that quite a few people are in ARM, with only 94 million shares trading and 900 million shares that are eligible for sale on March 12th. This thing could easily fall a lot, like big time. Keep in mind as well, the initial IPO of this thing flopped back in September. I mean, you did go up initially to 69 or so, $69. You fell all the way down to $46. I mean, it kind of flopped, right? It's only here recently where people have gotten a lot more excited on the stock. And again, this whole time, you've only been trading 94 million shares. I'll leave it up to you to decide what could be to come next. Let me know down below in the comment section, what is your opinion around ARM, and is SoftBank going to sell 50%, 100%? 10% of their stake? I find it kind of crazy. They were looking to sell at $40 billion and only make $8 billion on the whole trade. And now, I mean, it's substantially more than that. So we'll see. I just want to give this warning out there. And at the same time, it could likely bring down the markets. Like if there was any time that we could go through a correction-like event or any catalyst to do it, it would probably be this ARM lockup and any of the data that we get over the next 2 weeks or so, and Fed Jerome Powell on Wednesday and Thursday of next week. So let me know what you think about this information. Hit that like button as well as subscribe to the channel. And it seems like even institutional investment firms are blind to this risk as well. Rosenblatt Securities just raised their ARM price target to $180. It is chase and then chase more. That's the mentality that we have right now in stocks like ARM, nvidia, SMCI, and many others. New Street Research reaffirms their neutral rating for ARM, and they did assign a $110 price target on the stock. That seems a little bit more reasonable to me, accounting for any, potential downside from here. That makes a little bit more sense, but you definitely want to be on the careful side. If you take a look at the short position currently in ARM, that is sitting at about 7.5%. There is 7 million shares that are currently sold short. So almost 10% of the 94 million shares trading hands, almost 10% of that is also sold short. So yeah, it's going to get crazy. Let me know what you think about this information down below in the comment section. You guys have a fantastic weekend, and I will see you in the next one.